Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, as always, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Regulus Resources, an international mineral exploration company run by an experienced technical and management team. Their principal project is the AntaKori Copper Gold Silver Project in Northern Peru. It's John Black. Great to have you on the show.
Hi, Jesse.
Hello and welcome to Commodity Culture. I want to start things off with your current macro overview of the copper sector. I'm wondering what the main themes and trends you're currently watching are in the space that you think more investors should be paying attention to.
Well, I think one thing that's very obvious, and we get a lot of feedback from the major companies that are interacting with us and watching our projects, is that there's an increased demand for copper. And as an industry, we're just not building mines quickly enough. And the current mines that are in production are decreasing in production and facing lower copper grades. And so as an industry, I think we're going to be very, very challenged to deliver the amount of copper that's necessary to feed this increased demand. And the increased demand, we can point to obvious things like larger number of electrical vehicles or increased use of renewable energy as part of an overall effort to move to a lower carbon future in the world. And then we can get caught into whether that's going at the pace it was projected to or not, or we can get caught into whether China's growing rapidly or not. And that affects the prices sometimes in the short term. But if we step back a little bit and take a look, the demand for copper is much more than just electrical vehicles. Recently, there's been a lot of news about AI data centers and the amount of electricity that's necessary for that. And copper drives all of this. You'll need copper to move that electricity around no matter what. And even farther, if we step back even more, copper has doubled in demand about every 20 or 25 years for the last 120 years. It's just due largely to population growth in the world. And as the world's population grows, a larger portion of the world's population is moving towards a middle class lifestyle, and that results in increased copper. So I think sometimes we focus too much on the little details of this and miss the picture that there's just a steady increase of copper. It surges like we're seeing right now. And as an industry, we're not finding enough copper, and we're not developing copper mines quickly enough to satisfy that demand. So we see a very clear picture that there will be a pinch point for copper in the next 5 to 10 years, and major mining companies are going to be scrambling to find deposits to build to satisfy that demand or that supply shortage.
Absolutely agree with you there. Copper, the price of copper had a great run this year, hitting all-time highs of $5 and change. Before correcting to where it sits now, it's kind of started to run up a little bit again. We're just over $4, I think $4.13 or something like that as of the time of this recording. I want to read a quote from Ole Hansen, head of commodity strategy at Saxo Bank on CNBC, where he said, "We believe the worst of the correction is over, but before copper can mount a stronger recovery, demand fundamentals need to improve, potentially supported by restocking through lower funding costs once the Fed starts its long-awaited rate-cutting cycle." Firstly, do you agree that the worst of the correction is over? And secondly, do you think Fed rate cuts could positively affect the copper price?
I can't really predict copper prices very well on things overall. And it speaks a little bit to what I just mentioned on bigger cycles versus kind of short-term corrections on this. But I do believe that copper ran strongly early this year, perhaps overran a little bit. I think we're overreacting now on this correction. And I would think that the correction is largely over. It probably corrected a little bit more than I would have thought it would have on this. So I think we're through that largely. I don't know when copper will go back up, but the fundamentals are there in the time frame that the major miners are looking at on when they need to have new production in, say, over the next several years to have copper prices increase dramatically on this. So I absolutely believe that it's not likely to decrease very much more, and there's a lot more upside to it than there is downside right now. As far as rate cuts, I think rate cuts can help in two senses. One, the rate cuts themselves will provide access to capital, allow people to develop industries and copper projects and others more easily. So it's partly the access to capital at lower rates, but it's really the biggest thing on this is I think there's an opportunity between now and the end of the year that we move into just more certain. There's a lot of volatility in the market right now as everybody waits to see what happens with rate cuts, as everyone waits to see what happens with key elections around the world. I think as we get through those, it'll bring some stability. And that stability generally helps us to see increased economic development. So I think the rate cuts will help in two senses, really. One the cut itself, and one the just the certainty and the stability it'll bring to the market.
And you mentioned the lack of producing copper mines versus the demand that is here now and that is also coming up ahead. I'm wondering, with the massive lack of copper supply coming online and the incredible amount of both time and capital that it actually takes to bring a new copper mine into production, are we going to see perhaps a flurry of M&A activity up ahead in the space?
Well, I think we actually already have seen it, and it's an interesting one because I guess I have the benefit of being a bit older and I've been through quite a number of these cycles. And each one, when you're in it, seems a little different than the previous ones. But when you step back, they all have kind of a similar pattern to them. And what we've seen is over the last, say, 2 to 3 years, there have actually been a lot of M&A activity with major copper producers buying producing assets. So they're shopping for projects that are already built or already producing. And why is that? It's much easier to value a producing asset. It doesn't require additional capital. It's purchasing. You know what your production is going to be. You know what your costs are. And so the groups that wanted to increase their copper production were looking to acquire those assets. Many of the easy ones have been acquired already, and the price has begun to increase for producing assets. They were purchasing those because the prices were low. They were viewed as cheap and low risk acquisitions. As prices have taken off with the rise we experienced earlier this year in copper price, some of those are outpricing this. A good example is Anglo. When BHP was making a run at Anglo, they decided to back off because it simply became too expensive to go forward with. So that, I think, produces kind of a logical transition into the major companies taking a look at pre-development assets, projects like what we have in both of our companies, which are projects that they could acquire but will require building those. And that involves more risk and more time to get those in production. That's why they chase the producing assets first. But as those are cleared out or become expensive, it's logical we see a transition into M&A more in the pre-development stage. And I think we're already seeing that. We've seen 2 recent acquisitions that are very important. Rex Minerals was acquired in Australia recently for a pretty decent takeover price on that. And then the big news came when BHP and Lundin Mining agreed to a pathway forward for the Filo project and the Josemaria project. So those are the first 2 real steps into acquisitions of pre-developed projects that will need to be constructed. And we think that's just really the starting point for what we anticipate over the next several years. We'll see continued acquisition of those type projects. And quite frankly, there just are not many of those that are available. So we're pretty happy to be sitting on good projects ourselves.
Yeah, well, that's a perfect pivot to introducing Regulus Resources to the audience. Could you maybe start by giving us an overview for those unfamiliar with the company?
Certainly, absolutely. So Regulus is the second of 3 companies we've had with our same management team. And on all of our companies, our strategy is to identify projects that have potential to be very large copper or copper gold deposits. To acquire those when there's a downturn in the market or a special situation that allows us to access a property for a good entry point. And then we drill those projects out, show their full size, and de-risk them through approximately a pre-feasibility stage. And at that point, ideally, we sell them to a major company that would build and operate the mine. We're not miners. We're not developers. We're very good at finding these projects and delivering the projects to those that can then take them on. It also compresses the time frame into a time frame that's more reasonable for most investors. It takes a long time from discovery to building a new mine. Average now is probably 16 or 17 years. That's a little long for most investors. So we try to compress that into that point in the exploration story where you're adding a lot of value between discovery and say a pre-feasibility stage. So that's our overall strategy as a company. With Regulus, we have our hands on a really exciting project called AntaKori. It's in Northern Peru. It's immediately adjacent to an operating mine called Tantuatay. And what we have there is we have a portion of a very large copper gold deposit. Part of the project sits on our ground. Part of the project sits on the adjacent ground. That's a joint venture between Southern Copper, which is Grupo Mexico and Peru, Buenaventura, and a local Peruvian company called Espro. So those three work together as a joint venture. They're currently mining the upper portion of the deposit on their side, which is a leached cap. They're mining that for gold production from cyanide heap leaching of the gold cap. And they're effectively pre-stripping this very large copper gold sulfide deposit that I mentioned is partly on their ground and partly on our ground. So it's a brownfield setting, very large deposit, a little bit complicated with a complex ownership, which makes it a little bit less visible to the market. But many of the major companies that work in the space, both large copper and large gold companies, are very closely monitoring the opportunity.
Let's talk about the team behind Regulus, because they have a tremendous amount of experience, including yourself, and the team previously sold Antares Minerals for 650 million Canadian to First Quantum. So talk to us about what the team learned from that transaction, and along with your own background and how you came to be the CEO of Regulus.
Certainly. I'm an exploration geologist by training. I spent the first part of my career, I used to say first half, it's probably the first third of my career now, working for major mining companies. So I came up through Kennecott and Rio Tinto and Western Mining. And much of my role with those companies was to look for large copper deposits around the world. Kevin Heather, who's our chief geological officer, has a similar background, but more on the gold side. He came through various government surveys in Canada and then an extensive period of time with Barrick and consulting for other large gold groups like Anglo American. So between the two of us, we have very extensive experience throughout South America. We know how to operate in the different countries. We know the rocks well. We have a lot of contacts there. And when some friends approached us in 2004 with the idea to set up a junior company, we jumped on the opportunity. It was becoming increasingly frustrating to work in major companies, particularly in downturns in the market. And we saw an opportunity that we could do the same work, but move more rapidly ourselves as a junior company. And when you do that, you have to determine what type of a company you'll be, whether you're specialized in a certain commodity or a certain country. And based on our experience and extensive contacts, the most logical way for us to go forward was to leverage on that experience, identify projects that we thought could be very large copper deposits or copper gold deposits, and then capture those and as I mentioned, de-risk those, drill those out, de-risk them, and sell them to a major mining company. So that we set out with an intentional strategy. Our first company was called Antares Minerals, and we identified the Hikira project in southern Peru, which met the criteria we were looking for. We acquired the project for about $15 million. We spent about $45 million to drill it out. So with our style of work requires access to quite a bit of capital. We do a lot of work where we operate in many ways just like a major mining company when we're exploring one of these projects. And then when we had that one at a PEA stage, we were in a peak in the copper market, like what we anticipate we're entering into right now, with a lot of interest of companies looking to acquire projects like we had. And we fell into the fortunate situation where First Quantum made us a pretty attractive offer, and we were able to sell that project. So a project that we paid $15 million for, we put $45 million of work into and a lot of time and sweat into it. We sold for $650 million to First Quantum. So it was a good execution of our strategy. It sounds simple. It's not as straight line as what I just described. There were quite a few ups and downs along that pathway, and we learned a lot in it. I think we went into it as good exploration geologists, as scientists, and knowing the rocks and knowing how to work and knowing how things work in the different countries. But I think we came out of it as much better businessmen. You really learn what major companies are looking for. It's not as simple as grades and tons or grade intercepts. Those are all important. That's fundamental. You have to have the right rocks and the right project to start with. But there are a lot of other factors that go into producing a project that a major company is willing to pay us handsomely for. So that learning experience we had is tremendous, and is certainly helping us as we continue with other projects.
So let's dive a little bit deeper into AntaKori. It's a brownfield project, as you mentioned, close proximity to 2 operating mines. Could you break that down for us and also touch on maybe the infrastructure or anything else you think it's important for people to be aware of when it comes to that project?
Absolutely. As you mentioned, we're immediately adjacent to 2 operating mines. The Tantuatai mine is immediately next door to us and is currently mining that oxide cap. And then 7 kilometers away is a Cerro Corona mine, a mine operated by Goldfields. And both Cerro Corona and Tantuatai have been very good mines for their respective owners, but they're nearing the end of their natural mine lives. And that enters into a stage that sometimes is a challenge for us in the mining industry. When mines like this are operating, we provide a lot of benefits, both directly through employment and indirectly through service provision and other things. But when the mines close down, that can have a negative impact in the areas we work. But in this particular setting, in the Waguyoke district where we're at, there's an outstanding opportunity to make a transition from 2 nice-sized mines into 1 very large mine, the type of mine we refer to as a multi-generational mine. It's a mine that'll have 30, 40, 50 years of mine life. So not only do the people working there benefit from it, but perhaps their children and others working in the future will as well. And those large, long-lived mines provide much more ability for mining companies to provide better infrastructure for the communities around the area, for health benefits and others. So that's why big companies look for these really big opportunities. So outstanding opportunity for this to make a transition into a much larger mine. It'll require some consolidation and collaboration between ourselves and all parties in the district moving forward. And keep in mind, in the province of Cajamarca, it's not just the immediate Waguyoke district we're in. We're only 35 kilometers away from Yanacocha, which is has been the largest gold mine in all of South America, a big Newmont operation, which is also going through a similar transition to what we see on our project, moving from oxide heap leaching to processing sulfide minerals underneath. So there's a tremendous chance for major improvement of employment benefits in further development of the mining industry in the Cajamarca region of northern Peru. So we're looking forward to the positive impacts this can have on a lot of people in the area.
At the beginning of last year, Rio Tinto's Newton Group made a significant investment in Regulus for around a 16% stake in the company. Can you walk us through that and the testing work you're now doing with Newton?
We've had a long-term relationship with Rio Tinto. They monitor pretty closely what we do in all the companies that we run. And so they're always looking at the projects we have, and this one has caught their interest. They're not the only ones, but because of the investment they've made, it's publicly revealed their interest in us. And so what they're doing is they're providing us with funds to advance the project. And in exchange, they get to monitor us a little bit more closely as we're moving forward to see if the project develops into the type of opportunity they might like to acquire. But they're also specifically testing some new technology they have. They've recently formed a division of Rio Tinto called Rio Tinto Newton, where they've patented a whole series of processes that they believe will allow them to heap leach primary sulfides. The importance of this in a big copper deposit, you can usually make a distinction between near surface weathered materials as what we call secondary copper minerals. Those can be processed by low-cost heap leaching. You just put the material out as gravel piles and you leach that with sulfuric acid and you produce copper on site. So it has a lot of advantages of lower cost moving forward. But the unweathered primary copper sulfide minerals have always required milling, concentration, making a concentrate that you sell to a smelter. So much more capital intensive, much more involved. But that's the way most copper is produced. Rio Tinto and other major copper companies for decades have been trying to solve how can they apply that heap leach technology that we use in the secondary minerals to heap leach the primary minerals, which would allow them to produce copper more cheaply and in a more environmentally friendly way. They think they've cracked it, and they've asked us to be able to test their process on our project. So we're collaborating with them to take a look at it. If this works, it could be a tremendous benefit to the project in many ways. We don't need their technology to work to make this project work, but if it does, it'll turn a very good project into a spectacular project if it goes forward. That's primarily because it drops your capital costs, the investment required to develop the mine. It also uses a lot less water, uses a lot less energy per unit of copper that you produce. So it's great that copper is increasingly viewed as a green metal, a metal that's essential for us to move to a lower carbon future. But the mining of copper is carbon intensive, which is a bit of a conundrum for us. So this type of technology, if it's successful, will allow us to make a greener mine, a mine that produces copper with a lot less carbon footprint, a lot less water use to go forward on the project. So we're pretty excited to test this work and see where it goes. We're midway through the process right now of the column leach test to see how things will work, and by later this year or early next year we'll have a pretty good idea if this goes forward. And if it does, then we can explore possibilities with the Rio Tinto, how they might be able to have access to the project.
Yeah, very exciting. Well, let's talk about another collaboration, because you recently signed a collaboration agreement with Coimolache. Give us the details on that and what it means for the company moving forward.
As I mentioned, this project is complex in the sense that there are multiple owners. We have a portion of the deposit, and then the other portion of the deposit is held by a joint venture of three separate companies. So it's referred to as the Coimolache joint venture, with the three companies being Southern Copper, which is Grupo Mexico's Peruvian subsidiary. It's Buenaventura, which is a large Peruvian precious metals company, and Espro is a smaller Peruvian family company. So with that complex ownership in there, it means the district's kind of fragmented, and it's very difficult for people that are looking at it, whether those are large mining companies with an interest in perhaps acquiring the district, or whether it's retail investors or institutional investors. It's hard to see the full picture on it. We can put out our resource, but we underreport what we have. The other parties report in various ways, and it's not very clear on exactly what they have. The result is it's difficult to see the full size of this project. So what we've entered into is an agreement with Coimolache, where we'll work collaboratively to produce a mineral resource estimate for the entire district. And then with mutual agreement, we can move forward to producing a PEA, or preliminary economic assessment, to demonstrate what a large operation with no property boundaries would look like. It's important to note that this work is being done under confidentiality, so we can announce that we're doing it, but we won't be announcing the results unless there's mutual agreement. So first we'll do the work, and if everybody's in agreement, then we'll be allowed to either present those results to interested parties or ideally to the public. We'd like to get that info. I'd love to be able to show the world the full size of this project going forward, but we have to work with our neighbors on how we do that moving forward. So it's we've been collaborating with the neighbors on a number of fronts over the last few years while we've been working on the project. But this is the first time when we're really kind of taking a look at the overall project, at least an internal look at this point.
So Regulus Resources is known primarily as a copper story, but your 2019 mineral resource estimate for AntaKori shows the deposit also contains 4.5 million ounces of gold. We're now at $2,500 gold, a new nominal all-time high. However, it seems it's mostly crickets from the mainstream financial press. Why do you think that is, and what do you think it'll take for gold company share prices to start catching up with the price of the metal itself?
Great question, and this will be a major topic. I'm sure several conferences are coming this month here in Colorado. We'll have the Beaver Creek conference next week, followed by the Denver Gold Forum after that, and I'm sure there are going to be a lot of people talking about this. But you're absolutely right. Our project is predominantly copper. It's probably about 2/3 of the value is in copper, but 1/3 of the value is in precious metals, gold and silver. We've mentioned we have 4.5 million ounces reported in resource on our property. If you look at the entire project on just what's officially reported now, it's north of 10 million ounces. So that's that's big enough gold deposit to be of interest to any of the major gold companies. And it's also a big enough copper deposit to be interested in any of the major coppers. So one of the things is that we do receive interest from both copper companies and gold companies to evaluate the project going forward. As far as valuations for companies right now, a lot of this is caught into, it's great the metal prices have risen, but costs are rising for the operations as well. And fundamentally, you need to demonstrate profitability for companies to make them attractive acquisition or investment opportunities. And so the gold companies are struggling a little bit to take advantage of these higher gold prices and turn those into more profitability going forward. So that I'm sure there'll be a lot of discussion on that in the near future to see how they can attract more investment. One of the challenges we see in the explorer space, in the junior space, is there are just a lot of companies out there fighting for the capital. And we've been competing for capital with other hot topics, most recently in sort of the Nvidias and those type of companies that are out there, as well as Bitcoin or whatever's kind of the hot topic at the time right now. And I think people are a little slow to come back into the commodity space, both copper and gold right now. But I think there's an outstanding opportunity to pick the right companies in this environment and do well going forward.
Well, I'll end by opening the floor to you. Is there anything else you think it's important for potential shareholders to know about Regulus Resources?
No, just it's worth taking a dive into it. As we've mentioned, we're copper dominant, but with that strong backup of precious metals on both of our projects, actually Regulus and our sister company Aldebaran Resources. But in the copper space right now, it's just very difficult to find these type of opportunities. As explorers, we've covered most of the easy, low-hanging fruit on the surface throughout the world. We're seeing after a few decades when the world expanded for us to be able to explore in lots of parts of the world, now it's kind of shrinking a little bit, and there are parts of the world that we can't explore as easily. So finding these type of large copper projects like we have are increasingly difficult. And the major miners have not been making commitments to develop these type projects. So we're already in a pinch point for copper. That's why we have elevated copper prices, but that will just intensify over the next few years. And we see that it's very evident when we interact with the major copper companies. They're highly motivated right now to acquire opportunities to turn into new mines in the not too distant future. And at Regulus and AntaKori, with that brownfield setting, it's a project that's easy to envision a mine changing from a good medium-sized precious metal mine to a much larger copper gold mine with a long mine life. So it rises up on the list pretty easily to be an attractive acquisition opportunity to turn into a major project. So we love the fundamentals. We think we're kind of working towards a perfect storm for copper prices and the interest in copper deposits like this, and we think we're delivering a project exactly at the right time. So please stay tuned, watch what we're doing, and if you have any questions, like to know more about us, it's easy to contact us, and we're more than happy to talk about our projects or the copper space in general.
Great. Well, I'll put a link in the description below to Regulus Resources website, as well as social media profiles for people who want to follow the company and reach out for more information. Thank you so much, John, for coming on the show and sharing your knowledge with the audience.
Certainly. Thank you, Jesse. Look forward to speaking again in the future. Take care.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.